Welcome back. Numbers for IGL flashing for you on the screen. Pretty much flat actually on a quarter-on-quarter basis. Not much improvement as far as even the volumes are 8.3 versus 8.2 MMSAMD that we saw last quarter, and similar can be said for EBITDA. Margins have also remained pretty much flat, 19 versus 18.9%. But I think for IGL, more important bit will be the commentary regarding what's happening in Delhi with respect to the entire transition to EV, and the overall commentary about volumes is what will really hold importance rather than just the numbers. Separately, in terms of the gainers, you also have Gravitas India, which is reacting to its earnings. Birla Soft high by 5%. Indus Towers, Relaxo Footwear, as we pointed out, and then Blue Star also continues the traction on the upside with the gain of around 5%. Sudip Bandyopadhyay also joins us on the show. Sudip, let's begin by discussing the auto sector itself. We were talking about the report card that we have seen for the month of October, and I guess November is just going to be better because it's going to be Diwali and the festivity is going to continue.
Yeah, absolutely right. I think couple of things. One is we had the Shraddh period in October. So obviously the numbers to an extent would have been definitely sacrificed. We expect those volumes to come back in November. Yes, of course, there is Diwali, there is Dhanteras, there is Bhai Dooj and other festivities. So obviously the numbers are expected to be good. One factor I want to point out, I think pretty much all the components of the auto sector did well, except tractors. I think there was pressure on the tractor sales, both for M&M as well as Escorts, Kubota. So we will expect the tractor sales also to pick up on the back of rural income coming back, the harvest season coming, as well as a lot of money getting into the hands of rural consumers should enable the tractor sales also to pick up in the near future. So yes, November should be a better month, and definitely the overall auto numbers for November, including tractors, should be better.
Sudip, hi, afternoon. Good to have you on the show. What's leading to this excitement on Vodafone? There are reports that they're looking to exit Spain with that $5.3 billion sale to Zegona, but the stock is now at a 52-week high. Worth a look at?
Obviously, Asha, I think the Delhi meeting where Prime Minister also was there, I understand Mr. Kumar Mangalam Birla mentioned about capital infusion and a lot of investments to be made by Vodafone. Obviously, this can only be made provided the promoters bring in capital. So I think the one problem which was plaguing Vodafone was promoters not committing capital. Now, if that happens either through Vodafone or through Birla's, I think the company can swing back into a winning trajectory, into their winning trajectory very, very soon. They have the numbers, they have the customers, they have the systems, processes, pretty much. What they were lacking was, investment in the business for some time. I mean, and that's pretty long in this telecom business where things move very fast. Also, they have lagged behind as far as 5G investments are concerned. They have been losing customers, every month and quarter on quarter. Now, these operational things needs to be tightened. Capital needs to come in, and things should start improving. But I think the starting point is capital coming in, and the excitement around that is on account of promoters making the right noises from both the sides.
What about the real estate pack, and where does your preference lie within that? There are the NCR players, there are Mumbai players, South India, and then of course there are commercial players as well, like Phoenix Limited.
Well, I think overall, Anisha, overall real estate, we have been positive for some time, and we continue to maintain our positive view. Some of the statistics which are kind of bandied about is the Tokyo city has commercial space, total commercial space, which is much higher than the entire India put together. So obviously, in an India where the GDP is growing at 8% or thereabouts, the commercial space demand will move up significantly in the coming years. We have already seen real estate demand coming in a big way as far as both affordable as well as high end, particularly in the high end. So our belief is that real estate for the next 4 or 5 years will have good time. Also, I must say the real estate sector has, there were a lot of question marks around real estate sector, the practices. I think all those are mostly things of the past. Most of the players have cleaned up their balance sheet. The GST implementation has happened. RERA has come in. Accounting standards have been tightened. So overall, I think it's a very safe place for the investors now to invest in, considering the growth momentum of the sector. And that's why we are seeing money coming into real estate sector. We believe that both residential as well as commercial should gain over the next few years. Phoenix definitely, Macrotech, Oberoi Realty, Godrej Properties, all these can be looked at. We can look at the NCR and DLF. I think for a long-term investor, even at current level, DLF looks good. One can look at Shobha, Prestige. I think there is absolutely no problem. Just that one has to remember that because the prices have run up quite a bit, if you are in for 1 year plus time horizon, these are good investments to look at.
Right, okay, that's the take coming in on Realty. Sun Pharma, that's a gainer today, continues to be a good day for BPCL. In fact, it's been a decent, past fortnight or so, or at least a week for BPCL. Today too, it's holding up by about 2%. There's SBI, there's Reliance Industries. Reliance, though, has fizzled out from the top of the day, just marginally higher as we speak right now. But let me take it across to Sharad, find out what the dealing room chatter is. Sharad, what's the stock being talked about?
Well, yes, in focus we are having Manappuram Finance, and what we are hearing from the dealers is there's buying seen in a couple of counters in the HNI segment, and also the volumes have been showing strength in the latter part of the day. Importantly, the stock is trading at its 100 DMA levels, but the street is expecting that the Q2 numbers, which is expected to come out on November the 13th, is expected to be very strong. Now, of course, the gold overall, the loan portfolio, that is expected not to grow up so much in the loan segment, but the overall consolidated loan growth is expected to come in roughly at 5% on a sequential basis, but the drive of the earnings will be from the non-gold loan portfolio. Now also the valuations are cheap, coming at almost 0.9 times its price to book on a trailing basis as compared to almost 1.4 times, which is the 5-year average. Now also apart from this, the 12-month target price as per the Bloomberg estimate comes at roughly 169 rupees per share. That means almost a 23% return potential is expected over the next 12 months. But currently we did see the prices coming in for the gold prices actually gone up, and the festive season is also coming in. So because of that, what happens is there might be a contraction of the margins as well, but this is only applicable for the gold loan portfolio.
Sharad, we leave it at that. That's the buzz across dealing rooms on Manappuram Finance. Just looking at some of the other movers, and clearly some of the metal names are the ones which are starkly under pressure. Of course, earnings reactions coming in here on Jindal Steel in particular. Adani Enterprises ahead of its numbers, I think tomorrow, that's down about 3.5% or so. Rajesh, let's just get in what you make of the weakness in metals right now, and if there is a trading opportunity here.
Actually, most of the metal stocks are struggling to give any kind of pullback. And if we look at the weekly setup, most of the metal stocks are sliding since last 3-4 weeks. And looking at the overall structure for most of the metal stocks are in downtrend. If we talk about Jindal Steel stock, given a breakdown of its important support area of 600 and now sustaining below to those levels. So I think there would be another round of selling pressure we can see in this stock, and possibly it may slide further towards 560 level also. Tata Steel is also getting more supply pressure. Now stock is approaching to its critical support area of 200-day moving average. So I believe that metal space one should avoid at this moment on the buying side, because the structure is already weak for the near term as well as for the short term. Most of the metal stocks may correct further from the current level. Another 3 to 4% correction we can see in the continuation of this down move which we are seeing.
Okay, just a bunch of other names, and Sudip, have to discuss L&T with you. Blowout set of numbers. The order inflow, of course, is so robust. We all know that this forms part of pretty much everyone's core portfolio, but the stock has been unable to hold on to its gains.
Well, I really, Aisha, can't comment about why the market is reacting today in the way they are. But the fact remains that, as you rightly said, blowout set of numbers. What is more important, I would like to point out is that, the global business, international business is now 35% of the portfolio and it's growing. There is a huge amount of new fresh orders which are in the offing as far as Saudi Arabia is concerned. L&T is a very well-established player there, and they are expected to win many more orders in Saudi Arabia. So that's about the order book. The question comes about the margin, because the margins was shade below the expectations. But the fact remains that if you look at the L&T's order book and the execution pipeline, the legacy orders are now getting exhausted, which were low margin, and the new orders which are getting executed now and will get executed henceforth will be higher margin orders. So the margin profile of L&T also will change in the coming quarters. I think that's very important for the market and us to understand. So, I have no hesitation in recommending L&T even at current level for a long-term investor. Remember the other fact that they have been systematically unlocking, doing value unlocking, getting out of unproductive assets. Even the last quarter they did sell the Hyderabad land, and the working capital situation has further improved with the 1,000 crore plus coming in through that sale. So I think all the boxes they are ticking, and there is absolutely no problem in buying L&T even at current level.
That's a thumbs up coming in on L&T from Sudip. But Naresh, what's your sense on Blue Star? Continues the momentum on the upside, and Kaynes Technologies, that's managed to recover quite a bit from that cut of almost 8 to 9% that we had seen earlier in the day. It's pretty much flat now.
So Blue Star saw big volumes, plus the overall the trend is a bit dodgy here. It has been volatile for the first time after quite a long period of time, where it used to be a slow and steady mover. So till the time it holds above the 870 mark, the trend remains okay, but not the best stock in terms of momentum as such. So could be looking at it as a buy on dips rather than at current levels. Kaynes, on the other hand, is something which has overdone the rally. So the stock has gone from 1,000 to 2,800 over the last 4 to 5 months. Created a classical top around 2,800. Should get into a range-bound move wherein 2,000, 1,800 could be a support. So overall, sideways to down for Kaynes.
Okay, that's the take coming in on what some of these buzzing stocks are up to right now. In the meantime, let's just take a look at where Reliance has been. And again, a curious case here, Sudip, because post the numbers, which were an inline set, that bit of a knee-jerk reaction, first day following the numbers, Monday did hold up 2%, but again has fizzled out from there.
Yeah, it did happen that way, Aisha, but I think this is one stock which is definitely deserves a much better valuation. Look, there are a whole lot of value unlocking triggers sitting inside Reliance, whether it's the retail, whether it's the the telecom, and even the green energy part. I think there are a lot of exciting things happening there. All the boxes are getting ticked by either the retail business or the telecom business, and even the traditional business. The challenge has been in petchem. That's because of the overall pricing scenario prevalent in that particular segment. Beyond that, I think even the refining margin, oil and gas exploration, gas from KG Basin, all that has been pretty good. So I really don't see any reason for Reliance coming down from the current levels. In fact, our view is that Reliance deserves a valuation close to 3,000 rupees immediately. Of course, as and when value unlocking happens, there will be significant opportunities through those.
That's a take for the heavyweight Reliance Industries, and the earnings, of course, were also good coming in. And since then, we have seen a bit of an up move on Reliance Industries itself. Today, what's holding ground is, of course, Reliance on one end. You also have Sun Pharma, which is actually supporting the index right now. On the losing side, it continues to be IT. So Infosys is your biggest drag at the index level, followed by TCS as well. Sudip, for IT, yet again, there were divergent moves coming in. There were names like, Birla Soft, as well as some of the smaller mid-cap companies that managed to surprise the street. But if you look at the large caps, there's nothing that makes it a compelling buy. Like nobody's in a hurry to buy IT right now.
Yeah, absolutely right, Anisha. I think that's pretty much what I have been mentioning regularly is that, the generic IT companies, there is not much excitement. I mean, they're good companies. There is no problem in Infosys. There is no problem in TCS, HCL Tech, or even Wipro. But the time to buy those are not now because there is nothing exciting happening. Next couple of quarters, I think we should wait and watch. Whereas in multiple pockets where these niche IT companies are catering to segments where there is tremendous growth, there one should look at opportunities. I keep giving example of these rate gain technologies. Now they are in travel and tourism. Now travel and tourism is a booming sector. So rate gain obviously is booming. So is probably Coforge. A large part of their business is travel and tourism. Look at Persistent Systems. They have been doing the right things in terms of automotive linkages and becoming a part of automotive supply chain through technology. I think these are the opportunities one should look at this stage. Time to buy generic IT companies will come, but that is not there yet.
On the index itself, there's a sudden slip in the last 5 minutes, both for Nifty, Sensex, Nifty Bank. Your BTSC trade, if any, on the index and stock specific? Naresh, the question is for you.
So going to only one trade, a buy on BPCL with a stop loss at 353 and a target price of 365.
Index, any trade, and what do you make of this slip? Naresh?
On the index, the same, the drift continues till the time we don't go beyond 18,600 or 19,300. It's better to avoid trading the index as of now.
For the index and any stock specific strategies as BDST ideas?
So I think one can look at Credit Access Grameen stock is showing strength, and we believe that Credit Access Grameen can continue furthermore strength, and 1680, 1700 is the possible target in the coming session. One can buy with stop loss of 1590, and the second stock is RK Forge. This is a third consecutive day where stock is forming higher high low formation. Stock is now trading about 20-day moving average. So RK Forge is another stock where one can look to buy. 660 is the BTST target with the stop loss of 630.
Okay, let's begin winding up for the day. We're closing in pretty much around the session lows. Broken that 19,000 mark once again, 0.5% lower, 88 points down. While some of the metal names have held out, you've got weakness coming in for Adani Enterprises, for Tata Steel, for Asian Paints, L&T, saw cool off coming in, 1.25% lower, and that's been the case with Maruti as well, along with Reliance Industries. But that's pretty much it in this edition of Closing Trades. We'll see you again with all the market action tomorrow morning at 8 a.m.